Welcome to Notepad. I'm your host Ibrahim Sani. This would be one of the last work from home kind of recordings that we will be doing from now on. As you know, the Recovery MCO or the Recovery Movement Control Order is well underway, and because of that, a lot of us, including myself, are returning back to the office. But the conversation, of course, now revolves around the recovery of Malaysia. We've been out and out for quite a bit. We've been out for close to 3 months, and businesses, productivity, manufacturing quality, all that is still coming back slowly. So we want to know what the situation is for investors out there, particularly those that are betting on companies that are highly involved in manufacturing, in real estate, in construction, of course, as well as services. Plenty to talk about. So because of this, we want to get one of our, mainstay kind of guests over. For this particular episode, we have Wong Wai Ken. He is, of course, the country head of StashAway. Ken, since we last spoke, you have compelled me to become one of your customers. So I have indeed signed up, and I have plonked in quite a bit of my little money, whatever I have, and stashed it away in StashAway. Let's do a quick review into how StashAway views the current environment of investing right now. Are you guys a little bit more optimistic, or are you guys very cautious moving forward?
Yeah, it's great to be with you again, Ibrahim. I'd rather be in the studio with you than in my office doing it remotely, but we do what we can. Malaysians are resilient people, we're creative people, so I think we're doing very, very well. And I'm very glad that we're on the path to recovery, because things were very dicey for a while. Coming back to the topic about investing, obviously things have been very, very volatile in March. Obviously there was a very sharp rebound in global and local markets as well. And because of that, we are actually a little bit more cautious, because the recovery is very fast and it's not really based on fundamentals. Yeah, like here in Malaysia, a lot of retail investors in the US have been very bored at home, opening up a lot of brokerage accounts with low commissions. Same story here. Here the glove stocks are really being bid up. Over there, a lot of the blue chips are being bid up as well. So you get a lot of speculative money in the markets, kind of not really adhering to the potential risks out there. So we have been a little bit more cautious. As you know, as a user, we have rebalanced our portfolios. We have reoptimized it in March to actually be a little bit more protective, because we are entering into a recession. The data has yet to really confirm it, but the days of the boom time is over. So because of that, there will be around 15 to 20% in gold, and also another 20 to 25% in bonds in our portfolio. So we are actually a little bit more cautious.
So let's do a quick stock take in terms of how the markets have performed. Me as an investor, I have an account with you guys. I also have an account with Wahid Invest. There's also my stocks in the equities. All took a very similar, very similar curve. It was a short dip and a sharp rise for the past 2 months. And of course, I think we've spoken about this quite a bit. I do balance my portfolio quite substantially, and with you guys, it's a little bit more exploratory, it's a little bit more aggressive, and I can understand the risks that are being taken. But that's me. I want to know a little bit more about the kind of situation that you guys are facing. Is it truly that short dip that you guys see? And if you can extrapolate that a bit, how do you foresee that for the rest of the year? Is the V-shaped recovery a really realistic thing to be speaking about, or are you, not that optimistic, so to speak?
Yeah, so I think let's distinguish what's happening in the real economy versus what's happening in the market. So starting in the real world with the economy, I think we all know that global economies are very complex. There's a lot of systems, there's a lot of forces at play. So I think a reopening at different stages, depending on the health situation in each country, is going to be a very messy thing. And because of that, I don't think we're going to have a very sharp rebound. I think we'll have a steady recovery as borders open up, as consumption returns to normal, and supply chains get restored. What I think we also have to be very mindful is how the markets will react. So we have seen it obviously take very good encouragement from what all the central banks have been doing, right? The QE has been very strong, so a lot of investors are seeing that as a backstop, and they've been really piling into risk assets because interest rates are also very low. So because of that, we also have to be cautious about how we see the rest of the year, right? Because now I think we're at a tipping point where it could go either way. It could recover very steadily, but it could also go back to retest some of the lows that we saw. So I'm saying this because also there's a potential risk of, shall we say, a second wave here, especially in the US, right? Which is also why we've rebalanced the portfolio to be a little bit more Asia-centric. You will see that we have ETFs in China internet stocks and also Asia ex-Japan, which have weathered the COVID crisis quite well. So I don't really think it's about chasing that asset class or that stock that is going to outperform. I think if we do that, we risk being too risky, taking on too much risk, I mean. So we are really diversifying here. And with that, we're able to hold on for a lot longer, depending on how things play out.
The thing about people like me is that when I say people like me, it's those that are looking at the financial markets quite extensively, is that there's basically two minds of this, right? People who are like me, where we are actually quite comfortable with robo-advisors, with ETFs, but there are others that are a little bit more, well, not like us. They want to go and hunt, if you will. But it becomes a little bit more realistic to speak that the markets right now, when you say you're rebalancing the stock, rebalancing your portfolio, looking at markets that are Asia-centric, looking at Japan, this is becoming clearly a trend. Just last week, I spoke to RHB, and the equities people over there was talking about the case for China, and they argued there is a case for China. Not because of China being really truly sexy and therefore everybody wants to run there, but it's more of the markets in the US and Europe and other developed markets that are not really giving the assurance that they're looking for. Do you think that this will be the trend, at least in the near term? Not just about China, but as you say, Asia ex-Japan. Will this be the thing that you want to look at quite extensively in the near term?
Yeah, as I think Asian countries in general have dealt with the COVID crisis very well. Just I think our own country obviously is one of them. We've done relatively well. Singapore, Taiwan, Korea. Japan is still not out of the woods yet, but the big player here, China, is the most bright light because obviously they have reopened, and if they wanted to clamp down their population, they can do that very easily, unlike unruly people in America where you can go out and protest and all these things, right? You can't lock them down as such. So in China, there's so many ways to play that very large economy. You can go look at the large index. You can go in specific sectors. So for us, we actually like the internet sector a lot more because that is more resilient. Because in the lockdown, we saw actually Chinese people actually continue to adopt technology as a way to live their life. And also what I mean by that is that we like software companies because they're not so affected by the trade wars between the US and China that are just flaring up again. And with the chip makers and all that with Huawei. So we're more bullish about internet stocks and software, companies like Tencent, Alibaba, because e-commerce really helps in a time of COVID, right? With distancing that's involved. So we like China, and specifically the internet sector.
Okay, when we come back, we'll take a short break, but when we come back, we'll talk a little bit more about the investor per se. Not so much StashAway, but investors per se. Don't go anywhere. Welcome back. You are watching Notepad. I'm with Wong Wai Ken. He is, of course, the StashAway country boss of Malaysia. Ken, we want to talk a little bit more about the investor outlook. People like me who are putting our cash, hard-earned cash, right? And this is more hard-earned than most because Some of us have literally lost jobs, or at least our income is now questionable because of the situation of COVID. What's the advice like for folks like me? We're not in the rich sector, but we're not really that worse off. We're just trying to get by. What's the story there for us? What would be some of the thoughts that you want to share with us?
Yeah, I just think generally it's good to be grateful for our situation. I think there's a lot that we don't control, yeah. So it's always good to count our blessings. I think for us who still have jobs, we should also think about the needy and Raya that just passed. I think there are a lot of good charities out there that are worth our time. But coming back to the investor who's looking to put their money to work, it's actually never been more important to revisit your fundamentals. It's not just about getting rich overnight. So what I mean by fundamentals is really looking at whether you have an emergency fund, right? Do you have 6 to 12 months of your salary or your monthly expenses put aside in case anything happens, in case you lose your job, in case your hours get cut, in case things get really dicey. So having that 6 to 12 months, I think, is a really good way to manage your risk. Another thing is that we advocate not borrowing money to invest, because doing that, it makes your mentality change. If you owe the bank something, even though your stocks are down, you're very likely to panic and sell. That's why there are a lot of margin calls and things like that. So I think stick to the fundamentals, get a diversified portfolio. If you're trading in Malaysia, look at some blue chips that you like and have fallen. And ultimately, having an emergency fund and also not borrowing to invest, I think, are fundamental.
It's also important for us investors to get our tools to the best of our abilities, get them on, see what we have, in our shed, and try to use them to our best ability. And this is the time when I want to ask you about the fantastic new product that you guys are launching. It's called StashAway Simple. Let's talk a little bit about that. It's launching today. Am I correct?
Yes. Today is the debut of StashAway Simple. We are very, very glad to bring this product to Malaysia, because in these uncertain times, we want to offer something that's very safe and low risk with modest returns. So basically, how we use StashAway Simple is, if you have any spare cash lying around, if you have any idle cash that's sitting in a bank account that's earning nothing, this is an ideal product for you, because we are offering a projected rate of 2.4%, very low risk. You are essentially taking on cash risk because the underlying investments are very, very safe and very, very liquid. So if you have any money lying around that's not being put to work or being locked up in an FD, you should really look at StashAway Simple. When you look at FDs out there, very, very low interest rates, obviously. 12 months FDs are going at 2.1%. 1 month FDs are going at 1.9%. 2.4% looks really, really good in the light of all of this. So
okay, hang on. There's plenty of conversations I want to ask on this. First of all, is this, I guess, product licensed and approved by the regulatory bodies in Malaysia?
Yeah, absolutely. So they are very aware of what we're doing and the progress we've taken since our launch in 2018. And this is essentially a fund that is a money market fund. It's a very, very low risk product. It's something that is plain vanilla, has been done for a very long time. It's just that we are offering it in a way that is really quite different from how it's being marketed today. As a traditional investor and saver, you look out into the market and what you see is a lot of FDs, right? Obviously, you have to lock up your money. That's what we are used to. But with the money market fund and StashAway Simple, you can actually earn a really good return, like I said, 2.4%, but you don't have to lock up your money. The liquidity is there. You can deposit, takes 2 days to go in, takes 2 days to withdraw. It's as simple.
So how do you calculate the 2.4%? Is it an average balance of over a certain time?
Yeah, so it's a projected rate of the next 12 months. So because the underlying fund invests in FDs as well, it's just that it's more liquid than FDs if you do it alone. There's always some money lying around in the fund to actually give back to people if they want to redeem. So we have a very, very good understanding of what the rate is forward. The underlying is very safe and it's very basic, and it's basically just FDs placed in the bank. There's very high confidence in the rate.
The money market fund has been around for ages, but I think this is the first time a robo-advisor is doing it in Malaysia. What was the, I guess, process that you guys had to go through in order to get this product out?
Yeah, so you're right. I think it's just that traditionally for retail investors, what we are used to is FDs first and foremost, and after that, booster accounts, right? High yield savings accounts. So those high yield savings account advertise a very high rate, but you need to jump through so many processes to actually get that high rate. Get a base rate, get a card or credit card, debit card, get a unit trust or an ILP, and then you get the high rate, right? So there's too much cross-selling going on. We want something that just cuts through all that noise and gives you a very, very easy to understand rate. So that's where our 2.4 and StashAway Simple comes in. We have also partnered with an existing fund manager called eSpring, and we are going to funnel the funds that we get from StashAway Simple into an existing fund that they have called eSpring Investments Islamic Income Fund. So an existing fund that is already out there, but we are just introducing it in a way to the new generation of investors and savers.
Does this mean that it's, I guess, in a way, Sharia fund, but you haven't gotten the necessary compliancy attributed to this, or how does it work?
The fund itself is also Sharia compliant because all of the underlying investments is placed in Islamic banks. So as you know, Islamic banks tend to give you a little bit higher profit because they're still looking to get deposits. So when the fund manager places these FDs in these Islamic banks, the rate tends to be higher, which is why we can get at that lovely 2.4%.
I want to focus a little bit more about the target segment that you're trying to focus on. Would this be a little bit more of I guess, millennials or Gen X, because they're a little bit more familiar with the idea of an ETF, robo-advisor, an idea with working closely and living on the mobile phone itself? Or are you really thinking about the broadest spectrum right now?
This is a broad spectrum product because each one can use it in a way that's unique to them. So someone who is very new, maybe haven't invested before, this is a really good way to just put your spare money to work and learn about other investment opportunities, right? For someone who is very savvy, what they can do with this StashAway Simple is three things. First, they can park it there, right, at 2.4%. Secondly, they can use it to stage their investments into our existing ETF portfolios that invest their money globally. And thirdly, is for investors in StashAway right now who maybe have a little bit more of a cautious outlook and want to take risk off, so they can actually sell some of their ETF portfolios and go into StashAway Simple.
This is crazy. This is really good. I just want to know a little bit more about the mechanism of taking in money in, money out. You did say it takes 2 days for the thing to clear, just explain a little bit about how it works for the investor here.
Yeah. So whatever you send to us goes into a trust account. We then take that and invest it into the fund that I mentioned earlier. And then when they want to withdraw, we just put in a sell order and get all their money back, and then transfer it back to their bank account. It's as simple as that because it's a locally domiciled product. We're working with a local partner, and everything is very seamless. You're not sending money overseas. You're not taking any FX risks. It's a product that is very basic and, like the name suggests, very, very simple.
So what's the trend like for StashAway right now? Are you guys going to create more money market products, or are you guys going to use the same one, StashAway Simple, and try to farm out to more, I guess, funds out there, not just eSpring there, but everyone else out there?
Yeah, we have really focused on eSpring because actually money market funds are actually more or less the same. Everyone else gives a relatively same return as well. So we do still want to farm out this money as well because it's just efficient, yeah, and we are not charging any additional management fees on top of this. So it's a really, really low risk and low fee service for people to use. In the future, we may introduce other investment funds that we curate and produce ourselves. But for now, we are partnering with someone who has been in the market for a very long time, very reputable, and it's in a fund that is very, very large. So I think where we are innovative is really how we are offering it to the public, right? We are giving it to people who have 100 ringgit to save, 100,000 ringgit to save, and you don't have to jump through any hoops. Super simple.
Fantastic. Okay, we'll take one more short break. When we come back, we'll conclude our conversation with Wong Wai Ken of StashAway. Welcome back. I am with Wong Wai Ken of StashAway. Since we last spoke, there's a lot of things that are being, moving about in Malaysia, and because of that, risks are now increasing, from credit risk, country risk, political risk, you name it, right? I mean, in the span of the 3 interviews or 4 interviews that I've had with you, we've had 3 governments, put it that way, right? What would be some of the thoughts that you have moving forward? Are all these risks increasing, and is a greater concern for you? I'm talking about internally, not about COVID, not about bilateral trade, whatever. Domestically, what are your thoughts on that?
Yeah, I think domestically we have our challenges, right? Politically, the volatility and the uncertainty is not giving a lot of confidence to foreign investors to actually come back to the KLCI. And then from a country perspective, we are obviously dealing with the COVID situation as best we can. I think the government has done a great job trying to help small businesses and the B40 and M40 segments. I am still quite concerned about the oil prices, which would give us much needed government revenue. And also because businesses have been hit, I'm also worried about the tax income that the government can get from corporates. So overall, I think these risks are still quite high, and therefore, overall, the risk to the ringgit is also still there. In March, the ringgit depreciated against the USD around 7%, and we haven't seen that since the 1MDB saga. Obviously, things have come back to 1.28, 1.25, and it's a much more normalized level, but the risks are still elevated. So because of that, I would urge people to return to those fundamental personal finance pointers that I talked about, and also maybe to diversify some of their money a little bit more globally.
Fantastic. All right. Thanks again for taking time to speak with us. Again, hopefully there's no second wave that is going to impact us, and hopefully we can get you in the studio and we can have a chat in person, face to face, without shaking hands, of course, because it's normal. If people want to check out the new product, how do they go about it?
All you have to do is download the app. Just search for StashAway on the Play Store or iOS, or you can just go to stashaway.my and check it out there.
Fantastic. That was my conversation with Wong Wai Ken of StashAway. If you've missed any part of this interview, just head on to astro.com, look for Notepad. Plenty of interviews like this can be found there. Stories about personal finance is coming up very soon this week, because the Sharia conference that is being hosted by Bursa is happening midweek this week. So I'm going to be hosting that as well, and some of the speakers that is going to be speaking at the conference will come on my show anyway. So stay tuned to that. It's a webinar and it's free, so you guys just look out, Google for Sharia Investor Conference Bursa, and hopefully the thing will lead you to some link where you can actually sign up there. That's happening in the middle of this week. Until then, thanks very much for watching, and goodbye.